Going live on YouTube, now Facebook. Vivian, how are you? Ooh, what a day. Good? Live? We're good. Ladies and gentlemen, Thanksgiving earnings week analysis. We're going to go over Ambarella, Abercrombie and Fitch, Best Buy, Burlington Stores, Dollar Tree, Dicom, Movado. How to trade every name I just told you truly consistently this week. Our algo levels for tomorrow. How to track all these earnings names that I've given since the start, as well as our closing thoughts. I am Mark Melnick, and this is the Newsbeat Show. Good evening, ladies and gentlemen. Welcome to the Newsbeat Show. What a week of things that we are bringing to you here. This is actually my third video here over the weekend. We've been doing like a lot of work to get you guys acclimated to the new environment, helping you find strategies that will work in this new environment. And we just have like a really good laundry list of things to do here today. So I'm going to just get started with it all in just one moment. By watching this video, you're going to pause the next slide and agree to everything before hitting play. Thank you so much for pausing there and reading it all, obviously in lightning speed and agreeing to it. Thank you so much. All right, let's get right into it. We have Thanksgiving earnings week analysis. We have 3.5 days of trading. Still some quote unquote sexier names that are still reporting. And we're going to go ahead and we're going to talk about some of them today. We're going to analyze them for you, as we do like to mix the fundamental analysis with the technical analysis together. I have some thoughts on Palo Alto, Nutanix, PVH, and Dick's Sporting Goods. We'll share my thoughts on that, but let's just get right into the action. We're going to start off, of course, at the top here with Ambarella. We're going to go AMBA, and semiconductor stock is trading well off the year lows. Again, the stock was as low as $33 earlier in the year. Semiconductors have been a very interesting spot. And I'm going to go ahead and share my thoughts on the earnings coming up. So again, every name I'm giving you, by the way, just so you know, is either reporting tomorrow after the close or Tuesday morning. So none of the names I'm giving you are reporting tomorrow in the morning. I'm giving you a chance to potentially keep an eye on it and or position yourselves if that's what you wish to do, of course, prior to the report. So just keep that in mind. Every name that I'm giving you tonight will be either for Monday after the close or Tuesday morning, meaning you could trade it on Tuesday morning open and, have the quote unquote first open day of trading after the report. Ambarella. Very interesting. Back on August 29th, they said they made 21 cents a share, which blasted the 2 cents out of the water. 56.4 million was ahead of the 52 million expected. And when I say blasted out of the water, of course, I'm referring to the analyst expectation. So they, as you can see right here, and I think I'll just pull up the one chart here, which might make it just much easier to see. We'll just go ahead and just add volume real quick. I just want you guys to just more focus on the daily here. So all right. So very simple. And of course, I have my yellow trend lines. Right over here, they reported stock closed at 47.37, opened up at 55.94. 55.94. Quite the gap up there in Ambarella. Ambarella is literally trading like after that big gap up on earnings day, it closed at 55.87. Pretty much just about $1 lower than there. So the stock is pretty much trading at right around the same point. For this quarter coming up, they're expecting 63 to 67 million in revenue. That far exceeds the 55.3 million in revenue expected. After they came out and they actually beat on earnings back over here, you got price target upgrades, $60 targets from Morgan Stanley, 68 from Cowen, 55 Roth Capital. Everybody just raising Craig Hallam's $62 target from 53. So just all these analysts just came out and raised their price upgrade. So officially, on paper, I will be bullish. And when I say on paper, what do I mean by bullish on paper? Well, the good news is you could track all the Newsbeat earnings names right over here. So if there was something that you missed tonight, there is a link within the description to just view these plays, obviously for legally for educational purposes only. If you took every single one of my ideas since the beginning of the earnings season up until now, with a $100,000 bet, you would be up $76,266. I have a lot of people who absolutely love what we do here, and I figured I would just share with you the list of upcoming names. And of course, I am spoiling you for how I'm calling these names. So of course, you saw I just went over Amberella here, so Amberella's along. And again, if you would like access to that, it is within a link description of this video. And then, of course, we're going to show you how to trade these names, of course, on the intraday side as well. So officially on paper, will be bullish in Amberella. Next is Abercrombie and Fitch. And every time I think of Abercrombie and Fitch, I think of, you know, 29-year-olds who are pretending they're in high school, hanging out at their parents' cabin in like upstate New York in a cabin by a lake, and they're all just hanging out there with just chiseled bodies and you know taking black and white photos of each other. That's what I think of in Abercrombie and Fitch. That's the culture as I remember it best. The truth is, without looking online, I could not tell you where one Abercrombie and Fitch is located in the United States. But let's go ahead and get into it here. So they last reported actually on August 29th, which was right over here, is the day they reported. So you could see it gapped down $2.30 plus. At the time, they had a loss of 48 cents a share. Believe it or not, that was actually ahead of the 53-cent loss expected. They lowered their fiscal year 2019 revenue to flat to up 2%. And that was a drop from 2 to 4%. So basically, they're saying the most optimistic scenario, we're going to be in the bottom end of our original range. For that, they saw a direct adverse impact from additional tariffs. That was the company, they actually said that on August 29th. I'll repeat it right from the horse's mouth. They said the outlooks provided incorporate the outlooks provided incorporate the estimated impact of tariffs imposed on merchandise imported from China into the U.S. in effect as of the end of the second quarter 2019, with anticipated additional tariffs of 30%, which have been proposed on select apparel and footwear merchandise imported from China to the U.S. The imposition of these additional List 3 tariffs, which are scheduled to begin on October 1st, they said this announcement on August 29th, same day they reported. So basically, they're pretty much coming out saying because there was no U.S.-China trade war deal signed just yet, that they have to pay more from their imported goods from China to the United States. Lower revenue, nothing good on the US-China trade war has come out since. I am officially bearish on Abercrombie and Fitch and officially put it on the list as bearish. And again, if you want a recap of all this, there is a link in the description of this video to view every single earnings play that I have ever given since the start of the season. So right over there, we're going to go to the next one on the list, Best Buy. And this is a name that I never understood. Like, I don't understand like how Best Buy trades so well. Like, I'll be honest, I have a very huge bias against places that don't sell food, and I don't mean like the candy section or the little drink refrigerator they have in the front of Best Buy. I mean like a supermarket. If you're opening up a warehouse type space, unless you're selling automobiles or food, probably not going to be a profitable business. And you have to remember, I was very bearish on GameStop as a result, even though GameStop doesn't have warehouse type stuff. I was more, bearish in Staples. That's like warehouse. Bed Bath and Beyond, I was extremely bearish on. And it seemed like all my bearish calls on that were just like magically correct, with the exception of Best Buy. And this one sort of threw me off because it always baffles me actually how this one makes money. Nonetheless, let's take it back to when they last reported, and that was, of course, on September 25th, earlier this year. And we're going to take you right over here on Best Buy to September 25th. Didn't really do much on earnings. No, I'm sorry, it wasn't. That's when they updated guidance. I'm sorry. August 29th was when they last reported. The stock gapped down about $3.75. They announced the dollar rate versus the 99 cents expected. They slightly missed on revenue, 9.54 billion versus the 9.56 billion expected. But let's talk about their quarter coming up right now. They're expecting a dollar to a dollar five versus the 94 cents consensus. However, on the revenue side, they are still looking maybe a little light, 9.65 billion to 9.75 billion versus the 9.79 billion expected. But what they did is they raised their fiscal year 2020 estimates for 2020, $5.60 to $5.75 from 545 to 565. So it does look sort of bullish from that perspective. It's kind of hard to say. I did officially put it on the list as bullish. I am, in all honesty, very skeptical, but I do want to, give my thoughts on why I did that. Best Buy is very big on selling phones. When people buy phones, they're not always going to like the Verizon store. When people have issues with their phones, they are usually going to Best Buy. I'll give you an example. Like, you could like look at my like anybody's phone, and probably everybody has had like a cracked phone before where the front cracks. And over here in the shopping mall, there's like four stores which, will remove the broken, glass film that they put on it to protect your phone, and they'll replace it for you. I went to Best Buy. Nobody does a better job than Best Buy at it. Like, to literally do the phone. They're the quickest, they're the most there's no little bubbles, air pockets in your phone. They do it perfectly. They do it smoothly. Um, I think because of that, Best Buy's managed to remain pretty quote unquote hot when it comes to this. I think during this Christmas season, they always manage to do well. And I'll be the first to admit, like, to me, I thought Best Buy would be a store that would go, bankrupt eventually. Not recently, but like I thought they would go bankrupt eventually because to me, every time I walk inside the Best Buy here in New Jersey, granted I'm not going during Christmas or Black Friday. I'm sure there are days where you can't even move in there. But for the most part, there's probably 20 employees in the store. I could probably see 10 of them. 10 of them I probably cannot see. Maybe there's more, and there might be like four customers in the entire store. That's what it feels like when I walk into Best Buy. It seems like there are more employees than customers. Nonetheless, I'm officially putting this one bullishly on the list as a result of all the phone stuff. Burlington stores. So if you're speaking of New Jersey, if you've never been to a Burlington, it's another warehouse style store, and they have like a ton of money in real estate. Let's go back to their last earnings, and their last earnings were right over here on August 29th, and you could see the stock, I mean, just gapped up $32, like just absolutely massively. Stock has been hovering really in a beautiful range ever since, excuse me, since the last earnings report. Let's go over it. They announced the $1.36, beat the $1.14, 1.66 billion in revenue versus the 1.63 billion in revenue. But this is what I like. You ready? They raised their fiscal year 2019 adjusted earnings $7.14 to 722. And that's a raise from 693 to 701. They see the next quarter's earnings, which again is reporting, either tomorrow after the bell or Tuesday morning, $1.37 to $1.41 versus the $1.34 expected. This is absolutely huge. This one I happen to like a lot. It would not surprise me for them to raise their earnings yet again. I mean, when you think of Burlington, it's a $13.65 billion company. I still think there's a lot of room to grow. I mean, for example, you could, compare that to Best Buy, which is again $19 billion, so worth 50% more. I'm officially coming out on the record very bullish on Burlington. And it's funny, I'm going through all these warehouse stores. Dollar Tree. They have some warehouse style stores. Most of them, I think, are just like larger stores. Like when you walk in a GameStop, if you go to any GameStop in the United States, they're mostly very small. If you go to any Best Buy in the United States, they're mostly the size of a warehouse. Dollar Tree is like usually, between very big and warehouse. But let's take a look at Dollar Tree and let's take a look at their earnings and let's just go ahead and discuss that. So, last time Dollar Tree reported was again on August 29th, right over here. The stock gapped up and sold off. It closed at 99.60, opened up at 102.50. This one is a little bit interesting for me. They said they see earnings per share $7 to $16 versus the $14 expected, 5.66 to 5.77 billion versus the 5.74 billion expected. Not super crazy about that aspect, but this is what I like. They raised their fiscal year 2019 earnings 490 to 511 versus the 477 to 507 expected. And if you're wondering why I weigh that very bullishly, is because the company is showing that it is growing in an environment with US-China trade war tariffs in place. You see certain companies saying that they're going to get hurt over it, like Abercrombie and Fitch. I think that company could get destroyed even further on these tariff things. Companies like Dollar Tree have been growing and raising during this environment. They're obviously doing something very well. I am officially bullish on Dollar Tree. The next one is Dicom. And if you've never heard of Dicom, that's as you see number 7 over there on our earnings to-do list. It's an engineering and construction company, and the company's just been hurting. The company's just been hurting. Last time they reported earnings, they gapped it up over here. They ran the stock up. They beat on their Q2 earnings, 94 cents versus 82 expected. This is what I don't like about it. You ready? This is why I feel this company is, and this idea I like. This is a short idea. I'm going to officially come out bearish. 60 to 80 cents expected. That's versus a consensus of 89 cents. So they're going to miss. They said they're going to have revenue of 820 to 870 million versus the 881 expected, 881 million expected. As soon as I hear that, the first thing that I think the first thing that I think is you're getting hurt by the U.S.-China trade war, and considering there has been no new true revelations in any true process moving forward in terms of the reduction of tariffs, I think Dicom is going to take this earnings quarter on the chin. Next one is Movado. Kind of a funny story here. With the first money I've ever made trading back in '99, I bought myself a $650 Blueface Movado watch, the sports edition Movado watch. And it was like the first luxury watch. I understand there are watches that cost over $200,000. I have a phenomenally high net worth individual who's a friend of mine, and he wears an Opus, and his watch cost him $270,000, and he wears it, and I'm like, aren't you afraid somebody's gonna come off and like chop off your hand? Like I joke around with him. He's a funny dude, but um, this to me was like my first luxury item ever. What you don't see anymore, unfortunately, is people walking around with Movado watches anymore. If you're walking around with a Movado watch, it's most likely old. They are just falling off the cliff. On their last earnings report, they cut their fiscal year 2020 revenue 225 to 235 from 270 to 280. I mean, my goodness, are these numbers going to suck? for Movado. I mean, my goodness. Are they, from the horse's mouth, they're expecting these earnings to suck. I agree with them. I'm not a fan of Movado watches anymore. I mean, the truth is, I'm not even that big of a fan of watches. I wear a watch for other reasons than telling the time, but everybody has a cell phone these days. Hate to break you the news. With that being said, I am extremely bearish on Movado earnings, and I am looking at them to sell off massively. So let's just go back to the list here. I'm going to share a couple more bonus names with you, but I want to talk to you about how to trade every single name and more that I gave you truly consistently. Truly consistently. So there's two strategies in which I'm looking to do on every earnings name. And these strategies are very high batting strategies. You have to truly take a look at it. And again, there are links in the description. It's Newsbeat show number 462 and 481, the Know Your Limit 21, as well as the new VWAP reversal. I did a video earlier today on the new VWAP reversal. There's links in the description. I'm offering that information to you guys for free out of the goodness of my heart to try to help your trading. Whether you follow us or you don't follow us, that's, ultimately your call. I still want to help you succeed as a trader. You couldn't do what I do with the just sheer volume of hours I put in if I wasn't ultimately concerned with your success. Take advantage of it. There are two strategies that I do which are absolutely amazing. We share the chart, we explain it through the videos. Here's an example from the VWAP reversal 2.0 that you could use in earnings names. It helped us catch Splunk actually at the bottom right over here. We actually were buying Splunk over here on Friday based off one of those strategies. We offer them again, we're offering these two strategies for free. They're pretty much batting 4 out of 5 for us. Means if you take 5 earnings names, I'll make money on 4 of them, and most people will that I've seen as well. Take advantage of them. It's a very big deal. And those are how you trade these earnings names intraday. So again, there's video links in the description. There's also another big video which we did earlier that talks about, and again, we did this video on Saturday night. Don't miss out. This video immediately became viral. It was a Saturday night video we did, and we went through all these things. The front run pump and dump, the expert diagnosing trader guru, the true FOMO cure, our stop losses on every trade, value added. How important is luck in trading? Why do you keep making money and giving it back? My personal Mark Melnick's lesson learned from my last big loss. What was the lesson I learned? And of course, what's working on earnings now, which again have links in the description. Definitely take the time and watch these videos. I put 3 videos in the description. Again, I rarely recommend that you really watch some of these videos, but people are telling me that it's game changing for them. So again, I will recommend that for you, of course. How about algo levels for tomorrow? Sure. Here you go. Here are the algorithmic levels for tomorrow, November 25th. These levels don't always hit, but when they do, I tend to be able to have an easy time making money buying through support, whether it's calls or stocks, or shorting through resistance, or buying puts through resistance when that one breaks. Again, they don't always hit, but when they do, I tend to have a very easy time making money off of them. I'm going to just share my closing thoughts here. My closing thoughts are we are in an environment that is extremely grindy. Um, I'll be happy to share my P&L, at the end of the month. I know a lot of people. There was some nonsense going on with that. People, who really want to see it. They really want to see how I'm applying these strategies and how they're working for me. And I was like, okay, well, I guess I could show you a number, but more importantly, I'm showing you guys the cost basis, showing you that a bunch of singles can add up into true money. You don't have to hit a home run every time. You don't have to bat for dollars and dollars and dollars on your trades. If you're losing most of the time, you do have to bet dollars to make up for your big losses. There's another way to do it. You could be consistently and try to catch dimes and quarters. I know, try to catch quote unquote singles. We are in an environment where we're just crazy glued to the all-time highs. We're in an extremely tight month here. You could use the Qs or spiders. If you want, I'll even show you the spiders. Here's a monthly of the spiders. Just keep in mind, last month on the spiders, you had a $20 range, whatever, $19, whatever, 80 cents, whatever it was, a $20 range approximately last month. We have 3.5 trading days left, and we have a little less than $8 range on the spiders. So when the ranges get tight like that, people who are like buy a stock here, sell it here, stop loss here, you're probably losing money on most of those ideas this month because people are not evolving their strategies to work in this environment. The links that I gave you in the description do share evolved strategies that are working now. And I'll leave you guys with this final thought. Everybody knows the market keeps evolving. You ask anyone, is the market always changing and evolving? They'll be like, yeah, it's a dynamic thing. Of course it is. It's not really an opinion anymore. Yet all the strategies that were thrown at you from these educational courses and wherever you've learned them from, most of them aren't working today. They were created during a time in which does not work anymore, and a lot of them are going to cause a lot of psychological toxicity. The truth is, there is no magic strategy, but there are strategies that work magically for the time being before they stop working. I know for a fact that I share two of those strategies with you in the links of this video. They're absolutely free. It does take your time. My time is my most valuable asset. I understand that. Watch the videos, take advantage of it, and take advantage of somebody who spent the weekend trying to figure out a strategy that works now, today, for tomorrow, as opposed to somebody who's just, regurgitating the same nonsense to you forever. Again, two very key videos are in the description. You want to see all my earnings plays and more. You want to see how we got to this. I mean, people in the Newsbeat live room are just, raving and ranting over these names. Again, on I share everything that I did since the beginning, winners and losers. You could just see we have the stock symbol, long or short, the closing price, opening price, if $100,000 bet. So if you bet, for example, $10,000 on every one of these ideas, you would, be able to divide that number by 10. But if you want to go over all the names I went over tonight with my directional bias, you could see right here I have the Ambra, Abercrombie, Best Buy, Burlington, Dollar Tree, Dicom, and Movado. We have a 3.5 day week. Do not overtrade it. Do not, get stressed. We're pretty much walking right into December. We're going to have a lot better news flow then, a lot more opportunities then. Definitely take it slow and smart this week. Definitely just try to lock in gains. Keep your psychology and morale up because it's going to be completely necessary for you to have that at a high level when you're trading the names next week. Hope you guys enjoyed the Newsbeat show. Slap the like button if you like these videos. Again, I don't monetize on them, but it does let me know that you like the content we bring you, and that means a lot to me. Again, I hope you did enjoy this Newsbeat show. Happy trading, make money, and I will see you guys tomorrow on the Newsbeat live trading broadcast. Have a wonderful evening.